How you doing? Good to have you on board, as always, for the first of two shows this week, Monday and Thursday as normal. Well, as the new normal, if there's such a thing. And Ash will join me very shortly, as will George, in the next half hour or so to have a look at what they're thinking about the markets currently. Tell you what, I'm at a bit of a standstill, I've got to say, because, and I'll show you why. But before I do that, let's take a look at the pound, shall we? And see if we've got a breakout trade for the day. Sadly, the answer is going to be no, and primarily that's because of the big move, I guess, as a result of non-farm employment change, formerly the NFP number, that came out of the States on Friday, drove the market versus the dollar. They said the dollar rallied, in effect, certainly against the pound. I think that was pretty much across the board, as the number was a big miss, actually, on the NFP, but the wages I noticed were up and the unemployment rate was down, therefore positive reaction. Now, whether that's going to force the US dollar into more rallying, that's oil, not the US dollar, that's the US 500, I'll get there in a minute, is debatable, because the previous 2 weeks where we had a game changer bar 2 weeks ago, almost a game changer bar again last week, but a bit of a mixed bag there, you'd have to say. And I find it very, very difficult to be confident predicting a direction of the US dollar at the moment. I've got to be absolutely honest. Not that I'm a predictor of direction, but I just like to think that there's a bias that I can take into the week. Not seeing that, quite frankly. Hi, Paul P. How you doing? And hello to all the buds in the room, all the trading buddies. G'day to you, in particular the new ones who are here. Welcome to you. It's nice to have you with us. Today's show will be pretty normal. There'll be me, who will look at this pound US dollar to see if we can find a breakout trade. Then Ash will be in to give his opinion of what's happening in the markets this week. In particular, have a look at the commitment of traders and the seasonal patterns as relates to just about anything we ask him, really. But it's your show. If you've got any questions, please throw them in the questions box and we will deal with them. The reason I'm not jumping into this pound US dollar is because of that move, as I said, on Friday. Now, for those of you who are new in the room, what we try to do each Monday and Thursday is see if we can find a breakout of what is deemed a range, if you like, between the previous 24 hours of trading and the day thus far. The day thus far seems to be ranging. There's no question about that. But what we have to do is trade the range of that 24-hour period. So the high here of that 24-hour period and the low here of that 24-hour period becomes our range. So we're looking to break out of that range. And we need to have a target for our first take profit area. And that target is exactly the same as the range between the high and the low of that period. So in other words, if we're going long here, we need, well, in this case, we had a 5 pips above, we had a 3 pips below. So you're looking at about 105 pips. So you've got to go 105 pips before you're safe in the market. I don't see that as a prospect for the long side, nor do I see it as a prospect for the short side, because I think we're still inside this range here, which is a pretty big bar, obviously. On an hourly chart, we're looking at a big, big range. And I don't think that we've got the right to say that we're going to break out of that just yet. Plenty of price inside that 1, 2, 3, 4 days now into the 5th day of that inside price action. I don't see that changing anytime soon, to be fair. Got an untested daily pivot above us, untested weekly pivot. Of course, it's Monday. That's often the case. And I wouldn't like to be going short. We've got a little pennant forming here, so it's going to break out. Agree with that. But I'm not trading the breakout of that. I'm trading the breakout of that big range there. So I'm not interested in doing that. I think the risk is far greater than the potential reward. So the answer is no. Okay. Do I want to analyze the pound? Not really. And I think if you're really taking a good look at what the dollar is doing at the moment, as I preempted earlier, I find it very, very difficult to predict a direction. As I said, what I can do and what I always do is look for what the chart's telling me. So pound versus the dollar at the moment is giving me the hint of a little double bottom sitting here on the daily chart. And if I think that that can reverse, I will wait and see if I can get something that tells me that it is possible, rather than predicting that this double bottom or potential double bottom is in fact the catalyst for change. So I'm not guessing here. I'm going to wait until I get a bit of a rally, maybe to a resistance level. And that resistance level can be anything, can be a trend line, can be a horizontal level that's been broken. That all makes sense to me. Can be a pivot, can be anything. But as soon as I hit that resistance level, I'm then looking for a bounce back that fails to take out the previous low. In other words, a higher low. So until I get that higher low off the back of a reversal pattern, which this could well be, it's not that clear, I've got to say, but it could well be a double bottom, and I'd be looking for that higher low before I considered going long. I'm certainly not going to guess here and say, okay, we're ready to go. Let's jump in. That's not the way I make money. In fact, it's the way I can lose it very easily. So that's going to be the theme. And if we go to the weekly charts, you can see almost without exception. In fact, there were only 4 exceptions that I found when I did my analysis yesterday that bucked this trend. And now that trend, and I use the word advisedly, trend is pretty much what we're seeing at the moment. Certainly seeing momentum in anything against the dollar. It seems to be downside. And in the case of the risk off pairs, notably the Australian dollar, Canadian dollar, and the Kiwi, or the New Zealand dollar, that is all downhill. And what have I got up here at the moment? Aussie versus the CAD. So we're right at the top of the tree here. What we have seen on Friday and indeed last week is a breakout of the previous range here. Now, the question mark is, of course, is that going to be a clear break? Is it going to mean that we've got further downside? Or does it mean that we have got a fake out here or a false break of that range? I can't tell at this point in time. What I would say is if I see a clear break of a range that has a decisive candle such as this, then one of 2 things is likely to happen. The first thing that is likely to happen is that this will continue to fall, probably to a previous level of support, maybe around about where that white line is, before it bounces again. The second is that this will be a false breakout. And if it is a false breakout, then the potential for this to change happens here at the top of that candle. So for that reason, I am often guided to place an entry above that breakout bar and put my stop loss below it. In this case, I wouldn't be doing that. And the reason I wouldn't be doing that is because I would have to risk, 193 pips or something like that. And my potential reward is less than 1-to-1. It's 175 pips. Now, I'm not averse to trading at less than 1-to-1. That's not what I'm saying. What I am saying, however, is that when we're in a trend as strong as this one, then I don't want to do that, because that particular target, which is the top of the range, right, could very easily be interrupted by a previous level of support or resistance, which in this case around about the 90 pip mark, or if it hit the trade line around about the same and didn't get to the top of that range. So for that reason, I think that's too risky a trade to take. If, however, I were to see on a smaller time frame a smaller breakout candle, and that's not one of them, then I could consider that. But until I see that, I can only guess that this is going to continue going short. Does that mean I place a short underneath it? No, it doesn't, because that's not my style of trading. I'd have to see something that resembles, if not absolutely mimics, if not is absolutely a retest of the breakout level. And that breakout level, of course, is in this vicinity here. So I'd have to see that before I even got interested in going short. To go long, I've just described that. You could go long above the bar, but you need to have a reasonable reward. On the daily chart, that's not so silly, because the sellers are going to be wrong at this point. Before it's going to be 127 pips. You'd have to take some profit around about the 1-to-1 mark, I believe, but then you've got a little bit up your sleeve where you could go to, nearly 2-to-1 up to here. So that would make sense to me to trade that bar long rather than that weekly bar, which I've just said. Anyway, the theme is very much the same with those momentum continuations, if you like. Not just as a result, I wouldn't have thought, as from the US news over Friday, but simply because I think the market is still very, very risk off, and I don't see that changing anytime soon, unless the market now considers, and there is reason to think that Omicron, certainly in Australia, we're getting results from infected people that are not serious, and certainly not as serious as Delta, for instance. So I think there's some form of, relief there from the fear that Omicron may well be the next big thing. Maybe that is not the case worldwide, I don't know. And it should be probably by the end of this week where we'll know by the science that should tell us pretty much the situation with Omicron. Now, that, of course, if it's good news, could well change the direction of the market. If we could go from a risk-off situation to a risk-on situation, in which case you'd be looking for signs that the Aussie would rally, the New Zealand dollar would rally, the Canadian dollar would rally, as what I said earlier in the show. The four, I just wanted to point out the four that I thought were. Hi, Lewis. How you doing, bud? And hi, Ash. Just before I get to you, mate, I'll quickly go through these. Only four of them that I thought were not momentum gatherers, if you like the others that we saw. 25 of 29 of them, in fact, that I looked at on Sunday. I thought everything was going with momentum except these four. Pound CAD was one, and does look to have put in a game changer bar here on the daily chart. Weekly charts, you would have to say, is almost a perfect doji. And I don't mind that. I don't mind trading perfect dojis in context, but I don't want to trade that one. But I would be very, very interested in trading a higher low here on probably a 4-hour chart. That may well be happening as we speak. I'd like to see it drop a little bit lower, I must say. To my mind, we've got an untested daily pivot. Of course, the weekly pivot's in its first day of operation, but I would be willing to trade this pound CAD long if I got it set up. Don't know about the hourly charts. It's got to go short before it goes long here. In my mind, anyway. I can't just trade it at this level. So I've got to see some pullback before I could get into that. But it is number one in terms of those that didn't go with momentum on Friday and the week. Now, this one, euro dollar, I'm bearish euro dollar, but I see that it is in a pretty innocuous situation. I'll put it that way. This candle here from last Monday, it was Tuesday, is still engulfing everything that happened throughout the week and thus far today. I think that may be a pointer as to what we're going to see throughout this week, until we get something that changes the market from perhaps a fundamental point of view. So I actually see this going, monthly pivot, daily, weekly, monthly, daily, weekly, monthly, and that suits me down to the ground if it is to happen. We're at the bottom right now, in my humble opinion, of what is ugly, but it's kind of there. There's kind of a descending channel sitting there, and we have come off the bottom of it. This may well be a higher low on the back of that. We've got a trend line coming up through here as well. So I might well be looking at a long here, but I'd like to see it break down here, consolidate a little bit, get a bit back above it, retest it, then I can go long. But you've got these pivots here to consider, so profit has to be taken before those. Swiss yen's another one. On the weekly charts, again, perfect doji sitting there. I don't mind that, like the level at which it is presented. What I don't like is this bar here that suggests that there was downside, but the downside only went as far as that previous horizontal level, which is interesting. And going back to what I consider to be range, I want to see this hit the bottom of here again, maybe even break through it, then get back into it, retest it. Then I can look to trade it back to the top of that range. It's in a no-go zone for me at the moment, but I'd really like to see it hit the bottom here and in fact, breach it. Maybe give me a double bottom here, back inside, and then I can go long. Aussie Kiwi is the fourth. Unsurprisingly, I suppose, with Aussie Kiwi, because they're very, very similar in terms of risk on off currencies, both of them risk off currencies, both of them commodity driven. And yeah, I don't see a lot here, but it was one on the weekly chart that didn't really follow momentum. Where's momentum? I'm not really sure, to be honest. We had a big rally there a couple of months ago. Return serve took us back to the bottom. We've come off the bottom. This candle here was interesting. Didn't really breach the previous week's bar enough in my mind to consider going short at that point. So maybe we're in for a little tweezer bottom, higher low, in a funny position with the pivots, but I'd be looking to trade this probably long back to these levels if I'm honest. Daily chart is no help, I've got to say. The gap down in the market's been erased well and truly. Bullish engulfing bar as a result of that. I think I'd like to see a higher low before I trade this long. It's not a market that I'm entirely happy with, I've got to say. There's a mess in the candles. If you're in momentum trades, I think you're in the best possible position that you can be. If you're not, then I'd certainly be waiting for retracements or pullbacks on those momentums and potential reversals. I'm not calling the market reversing at all, but I'm willing to suggest that if it looks like it, I could probably go with it. So I'll put it that way. Lewis, Euro Kiwi. I think I better bring Ash in before he goes to sleep entirely bored. How you doing, bud?
I'm okay, mate. Yeah, I'm okay. Just recovering from on an IFP weekend, so I am actually very, very tired. And my
you've been having a few of those lately.
What's that, mate?
You've been having a few of those lately. Back in action,
Yeah. We're back in action, but our boiler packed in as well, which was like, so during the event, like all of a sudden I got this power surge, and it took me a while to kind of work out what was going on, and eventually I unplugged the boiler and turned all the everything back on again, and everything worked. So that our boiler is totally gone. So the water is freezing cold, and the house is freezing cold right now because it is winter now. So
yeah, that's not good. That's not good.
No, not very comfortable. But at least
mind you, it does make you fairly compact in the nether region.
This is true. The thing is, I mean, it's all relative, isn't it, mate? Because at least we got walls. I mean, there are people out there that are on the street, or they just don't. I don't know. They're just living in terrible conditions. So it is, as I say, relative, and it kind of reminds you, in some respects, how lucky you are when you just got something simple like a boiler working. Yeah, it's definitely time for a new toy, Lewis. I'll tell you, I've just ordered a new PC, which cost me a bit of money because I like to get them custom built because I like it to do what I need it to do, really, with trading and things like that. So I really could have done without this little shock, but I think we're just going to need a new one. I don't think servicing it is just going to cut it, and I don't like wasting money down the line. So I prefer to, if I find things like that, a false economy. So I think we're going to need a new one. So yeah, not the best start to the month in a lot of ways, mate.
Well, we need to make some money then. What have we got? How can we make some money?
Well, do you know, I think an interesting market, and I think FTSE 100 up today, and I'll show you what we got. Listening with interest to your analysis, and let me just make sure I've got everything going on right here. Let me share my screen. Am I in here? Oh, I don't know if I am in here actually.
Yeah, I think unless you're in momentum trades at the moment, you're going to find it pretty tough with currencies right now.
Yeah, I think there's probably going to be a place to get into these, which will add some safety, and that's really what I want to talk about, because there's one thing.
All ears.
Well, I think there's one thing about picking direction. You know, I think the FTSE's going up today. That's all well and good. But I think overall the FTSE has a little Santa rally, and I'm not sure about. Well, I think they're probably the same with some of the US equities as well. That we do have this Santa rally that so famously seems to come around every time, you know, this kind of time of year. But
actually, I had Gordon on the show yesterday in the preview show, or what's it called, weekly Sunday like an update. He was calling a massive Santa rally.
Yeah. Okay.
He didn't say yet, but he was calling for a big one.
Yeah. I mean, I think the signs are there for that. And if we think about what you were just saying about Omicron, doesn't seem to be quite as infectious. It doesn't seem to be quite as powerful, and potentially not as impactful to the market as we saw with the original, if you like, the kind of the first wave.
Yep.
So the market's got this knee-jerk reaction where it has absolutely tanked. You can see here there is a big gap that needs to be filled in the market right here. I mean, there's a few actually. We got one. Sorry, that's black. Let's make this white. We got one here, so there's a big gap there, and I think the market will end up trying to fill that. And we just got this little one today here that could be filled. Now, if the market was really bullish, I think that particular point would become support, and it might still, you know. But what I'd really like is the FTSE in this area, because if it came down here, then I'd be all over it. So we got the monthly and the weekly and the daily pivots down here. So if the FTSE comes down to this point, I'm a buyer. If the FTSE doesn't come down to this point, I'm waiting for it to come and fill this gap up here, and then I'm a seller. So really everything in between, as you say, I think is going to be quite tricky. So it might, you know, and that's quite a lot to lose out on if we're not on board. And I don't want to miss that opportunity, but by the same token, I don't want to risk capital that is quite a lot of risk at the minute. You know, I think the overall picture for the markets probably is negative, because even though that Santa rally may well transpire, the Fed are ready with their fingers on the buttons, and I think the fact that Omicron is probably not as bad is probably almost bad for the US stock market. And we might well sort of rally into the end of the year.
I have to think about that, but yes, I understand what you're saying. Yep.
Yeah, you know, come January, February time, if we haven't been as affected by the virus, and employment data is still, the labor market is still recovering in the US, it really does put the Fed in the right position to do what they need to do. Now, that's the time I'm really looking for the US market to weaken, it around the end of January, February sort of time. Might be a little bit before, but I don't see it happening now. I don't see it happening just yet. I know we've had that really shock movement, but I wonder whether that does become a bit of a shock movement. We kind of calm down a little bit. We get better news on this variant, and the market rallies. And then when we actually get the structural change in the economy, i.e. the Fed moving, and potentially the structural change in the UK economy, i.e. the Bank of England suggesting or moving, that's the time that I think that we actually do see the markets weaken somewhat. FTSE is a bit of an odd one because it's undervalued anyway, but the US market isn't. So if you're looking for downside, it probably still is the US market takes precedent. But anyway, let's think about today. I think we've got an opportunity for a long. but I'm not interested in the long until, as I say, here. I think these areas, this whole kind of area that we're in right now up here is just all a bit dangerous. It's a bit of a no man's land, because when you look up here, this really is a sell zone. You know, this is a sell zone. We've seen it sell. What's that, mate?
I say absolutely. You've got three little Indians there as well.
Yeah, you got three little Indians. You got this, and this, as you say, pointing the three little Indians. Not a great place to go. Doesn't matter how bullish we think it is. Yes, I think it's going to get through there, but I don't want to try and get through there from this point. I want it to come down a bit. Now, there's also a little trend line here as well, which also might need to get kind of done. There's a little trend line there, which suggests that the market might come down a little bit lower. I won't be too worried about it coming down that low necessarily. I'll be okay. I'll be okay taking it in this area here, and just waiting it out for that lower end, and maybe adding to the position if it does come down. And we've got this as well down here, which adds some confluence, and it's round about the weekly pivot. So, but we've also got what I'm sort of seeing here is this potential happening here. Oops. I've got lots of pop-ups coming up on my screen. We got this potential happening here, something like that, which then starts to form a bit of a pattern. So patience is going to be the key here for me, where I see this, and I see this, and I see that. So now I've got my inverted head and shoulders, you know, that I'm looking for. It's not saying it's going to happen, but that gives me the left shoulder there. That gives me my head down there, and potentially I'm looking for a right shoulder around here before taking off. So that's what I'm waiting for, mate. And we know this stuff. You know, you've got to prepare properly, and if you prepare properly, and the market unfolds in the way that you've prepared, then you take the trade. If you've prepared and it doesn't unfold in the way that you've anticipated, you don't take the trade. It's as simple as that. So that's what I'm preparing for. Now, if I go on to the Nasdaq, I feel very differently about the Nasdaq. I want to short the Nasdaq. I'm not interested in taking a long in the Nasdaq, really. I'd really like to see the Nasdaq collapse, and I think that if there is a chance that anything would, it would be this one. Now, that doesn't mean I don't think there's going to be a Santa rally, but what I'd like to see it to rally up to this point, which is still going to be in the region of around about 2.5%. So a 2.5% rally to the upside gets me interested in the Nasdaq to the downside, but I wouldn't like to trade it. It's not really a situation for me where I'd be that keen to go long to go short. FTSE, bit more, you know, I'll be a bit more keen to go long to go short. The difference for me with the FTSE is that I think Omicron is really going to has affected the FTSE. I think the fact that it's so heavily weighted by energy stocks, Royal Dutch Shell, BP, both big oil companies. It's also kind of got the travel stocks involved in it that have been affected. When if Omicron comes out not to be quite as bad, those sectors are likely to rally, which takes the FTSE up with it. The Nasdaq's a bit different because in some respects it's a bit more bulletproof to Omicron because you've got the likes of Zoom, as an example, Netflix. All, you know, these are stay-at-home stocks. So actually a variant's good for them, you know, to a degree. Peloton, you know, these are kind of good things for these stocks, and it proved to be the case the first time round. So a weakening of the data on Omicron really probably doesn't do the Nasdaq much good. We have had Apple come out and say that there's not so much take up for their iPhone as well, which is big, you know, that's a big deal. And then you got the Fed involved. So there's not really kind of the same weight with the Nasdaq as there would be for the FTSE. And it surprised me to say that because Nasdaq is eternally difficult to short. And I would put the word never short the Nasdaq, apart from the time that you can, which is rare. So if you can pick it, I think it's going, and I think it's going fast, and I think it's going low. But I think, you know, actually trying to get into it is difficult. Now, I'd look for the same thing with the Nasdaq. I'd look for support here-ish, somewhere in this area. I'd look for support there. I'd look for the market to pop up a little bit. create a little head up here, come down, come back up again, maybe use this trend line. It might not get as get too far beyond, but then create that, and then you're in a situation where it might well rally from the head and shoulders pattern, or it might actually break down to something a bit more significant. But I wouldn't be too worried about that. All I'm interested in seeing if we can get down to this level here, which is 14,500, which is near over 1,000 pips to the downside. Now, 1,000 pips to the downside on the Nasdaq is going to be around about an 8% run or something like that. So if you look at this on a weekly, it's this is really where I'm looking for the pattern now. I'm looking for this now to be the head that we're in. I'm looking for this to be the left shoulder, and I'm looking for it to form a right shoulder. But before it forms the right shoulder, it's got to come down and give us a neckline, and that's what I'm going to try and trade. I'm going to try and trade the move down to the neckline before rallying. And I'm not interested in the stuff on the right as yet, but I'm interested in trying to get down.
So on the previous chart, was it the daily or the 4 hour? I'm not sure.
The daily, yeah.
Is there not already an option to play that break and retest of the neckline that exists on that chart?
Yeah,
which is already triggered.
This one here.
Yeah.
Yeah, I mean
it's too late. It's too late to get in, but
yeah,
if there was a pullback now.
Yeah. Yeah, if there's a pullback now, what I see if there's a pullback now is again a retest of the neckline. I see a trend line here. Let's get rid of that a second. I see a trend line here. I see this area here, this trend line from above, and giving a heavy confluence line right on top of the neckline, trend line, and this point here. So yes, I'd like to see the Nasdaq up here before trading it.
Yeah, I like that.
And you know, the other thing is, these are the futures, but that's going to be 16,000. So you're looking at a round number, you're looking at two trend lines, and you're looking at a horizontal level and a pattern, and a reversal pattern. So that to me is the sweet spot for the Nasdaq. And until I see that sweet spot, I'm not really that interested. And as I say, this might not be until, well, I mean, it suggests that this is coming in a month. Sorry, no. That suggests it's coming next week. So that's around about the 12th of December that is going to be going up there. You know, for this trend line to be to play out with the right time and get the confluence, it's around about the 11th of September. So of December. So we're looking at maybe Monday next week, which incidentally is getting very close to a Fed announcement, which is around about the 15th, I think.
Yep.
So it could be that, mate. It could be that we're looking at. What may, you know, a couple of things could happen. You might get a move down. You might stay down here. We might rally into the Fed movement. Before the Fed's announcement, we might start to tuck back a bit because everybody's expecting, you know, something bad for the market. Or we might rally all the way up into this point, and then the Fed announcement happens and we move down. Or my analysis is completely off and we don't do any of that. So it's really about anticipating what may happen right now, and that's what I'm looking for with that.
Okay, is Elon selling Tesla? I've got no idea.
Well, he has been, hasn't he? I mean, you know, it looks like a pretty good choice right now.
I don't do that.
He announced that he was going to sell 10% of his shares in Tesla, and he put it out on Reddit. And it looked like he was a bit early, but you know what's transpired since. I mean, everything was down. And this is the point where you look around and go, what are the really good companies in the States? And I love NVIDIA. I think NVIDIA is a great company. Will it give me a price that I think is attractive? Probably not. I don't think the Nasdaq's going to tumble. But it might give me a better opportunity than we have now, and Tesla will do the same, you know, if you like Tesla. So yeah, he is getting out.
And for Ramsey on YouTube, thanks for the question, Ramsey. You got an opinion on dollar yen, mate?
Well, the dollar should rally. You know, you always say to me that you don't like the dollar yen, and I'd kind of be in that category right now.
It's only because I don't.
Because you don't. I don't know. To be honest, mate, I don't know why you trade it. I don't know why you choose this one, if I'm honest.
Well, I avoid it
I guess,
as much as I possibly can. I'll put it that way.
yeah, I mean, if you're looking at this on a technical basis, then it looks like a short. You know, if you're looking, I'm looking at the monthly to start with, it looks like the market should come down. Do you know my problem with the dollar yen, Ramsey, is that if the Fed are talking about tapering and raising interest rates, then the dollar should do quite well. If we've got all this concern with the variant, the yen should do quite well. And actually, the fundamentals from Japan aren't too bad at all. You know, the unemployment rate in Japan is always pretty good because of the way they hold on to their employees when there are things going on. They don't sack people, they reduce hours. Whereas the Western culture sack people, they just get rid of them, you know? So unemployment starts to hop up when you get disasters, where in Japan that doesn't happen. So it kind of massages the numbers to a degree. But then you've got other things that you look at, manufacturing, servicing, all these kinds of things. And the United States is doing well, which is why Fed Chair Powell is talking about tapering and then, you know, a faster move to raising interest rates. But the Japanese economy is doing kind of the same. It's not quite as strong, but it's pretty good. It's not a pair that I would want to trade against, to be quite honest. If I was looking to trade something in the currencies, then I would choose something else against the dollar rather than the yen. Personally, we know what the yen does. It acts as an emergency breaker. If we're saying that Omicron is dying down a little bit, the news is dying down a bit, then the yen should weaken over the course of the next couple of weeks, and the dollar should strengthen. But I don't know whether it's going to go away completely. I don't know whether the volatility and the concern is going to go away completely. So I wouldn't be too keen to go against the yen at the minute, but I certainly wouldn't be too keen to go against the dollar either. I don't think this would be a pair that I would touch, if I'm honest. And you look at it, yeah, we're in a sell zone. You know, you look at this on the monthly, we're in a sell zone. Resistance point here, and it's looking like it's playing out to a degree. You could put that line wherever you like. We can see that there's resistance here on the monthly. You go down to the weekly, and it looks like we might even have a little breakdown of this point. Haven't broken this low, but it looks like there could be a bit of a lower high there. Looks like we're getting.
But where's it going? Look at the next horizontal level. It's dead ahead. You know?
Yeah, I mean, it's just too scruffy. It's too difficult.
It's too hard. Yeah, I agree.
If I was trading that short, I'd probably be okay to try and take a short there, but it just wouldn't be a currency pair that I'd be that interested in personally. I don't think it's the safest. So not for me.
Okay. My 2 cents worth is, if you're in a long at the moment, then you're going to be wrong underneath the daily bar of Friday, I believe, if that helps.
This one here, yeah.
Yeah, you're going to be wrong there. So, you know, I think your stops underneath that double bottom there, if you like, is probably where you need to be.
Yeah.
Because it's going to fall, gets through, in my opinion.
Yeah, and if you're in a short, you're probably wrong up here. I mean, it's basically this bar, isn't it? It's Friday's bar is probably the range where it turns bullish to bearish. So if you're in a short, you'd want your stops at that point, which really says to me, if you want to trade it, trade short at the top of the bar and long at the bottom of the bar, and you'd be much safer. I don't think you're not saying that's the
no, he's in a long at the moment.
Or you're in a long. Okay.
Short. Yeah.
Okay, if you're in a long, then let's just have a look where that might go. Yeah, I mean that would be the sort of the point that I think it would struggle to do in a thing. I don't think it's going through that level in the next day or two. I don't know what your strategy is, what your time frame is, but if it's a short term trade, I'd be thinking about taking profit here, or certainly sliding up stops at that highest point. So I don't think the dollar yen is going through around about the 113.50 personally.
There you go, Ramsey. Hope that helps. I don't think we have a firm opinion on where it's headed next, to be honest. But I think if A happens and those lows get taken out, it's off down to the short side. But right now I see it in a range, to be fair.
Yeah, yeah.
And Euro Kiwi for Lewis. Let's have a look at Euro Kiwi. Whilst you're hot there, mate.
Euro Kiwi, okay.
I've got it in a sell zone, but I'm not sure how far that's going to go. I've got it as a potential false break of a support area. So short to get long would probably be where I'm at.
Yeah. Looks like there's a support level there, doesn't it? Let's make that there. Yeah, I'd probably go with your sell zone idea. Straight away I see that that there's a potential for a little pattern forming here, possibly, which means that coming down to that might well transpire, and
which would confirm the false break of that support as well.
Yeah, I guess if it came down and retested, you'd be looking short. It's a bit tricky, and actually, I think what I'm seeing with the market right now, generally speaking, is we can have an idea on direction, but I don't think we've got a setup which says, now's the time to get in. It looks a little bit no man's land for a lot of this stuff. Big move to the upside, but a gap down as well. So a little bit inside. I should say that might get up there first. I don't in no man's land. Well, the trend on the 4 hour is to the upside. So I guess until that breaks down, you kind of look to trust that. The hourly looks like it's broken through as well. Hourly looks like it holds that level that there's a bit more upside out of it.
Little slingshot pattern there too.
Yeah. Yeah, so then the 15, you can see it even better. So there is a setup to the upside. I don't know how far it goes. I don't love it. Not really loving too much. Right. I think things need developing. That's the way I'm
going to
seeing
say that's how I started the show. There's nothing that I really can just look at a chart and go, that's the one for me.
Yeah. I think things are going in a direction. I think the FTSE's going up. I think European equities is going up. I think the global equities are probably going up. But I don't really see a point that I'd want to get in just yet. I think we need just a bit more downside, and then see if we can actually get an uptick. And it's probably the same with the currencies. I think you might have a bit of a tricky few, maybe a tricky hour or two. I'm not saying that there's not going to be a setup today, because I think there probably will. But I wonder whether it's going to be US session than the UK session. I think it could be quite frustrating for a few hours this morning.
We spoke about dollar yen, thanks to Ramsey's question, but I actually have an opinion on dollar Swissy today, and I'll take you through that if you like.
Yeah, take us through it, mate, because now that one I would be interested in. And on a I'm not even going to look at the chart, but I'm going to say fundamentally, don't like the Swissy at all. So I'd be more interested in the long than the short for that dollar Swiss.
Okay, then we're going to have an argument, which is a good thing, not a bad thing, because we'll probably sort each other out here. And here's my reasoning. Let me share that screen with you. So this is very much like you just pointed out on the FTSE, actually, where the monthly pivot of last month has just been a knockdown horizontal level, where every time price tried to get there, just bang, get out. Don't like you. Here's another point in question, where this is an hourly chart I'm looking at, by the way. So this is actually this month's chart, sorry. I didn't mean to be on that chart. Let me go to something more substantial, but you'll get the same picture, where we've had this level going through here, which is 90, let's call it 93, in that vicinity, where we've had a big bounce off it as support, finally broke through it, became resistance again, broke resistance, became resistance again, became resistance again, became resistance again. And we've come off that for let's call it a fourth time in the current status that it holds as resistance. What I see at the moment on the daily chart is a very clear range, and that range is all inside this bar here, which actually backs up that bar there, which is a reaction off a big double top on the daily chart. So really all I'm waiting for here is a lower high to confirm that this market actually wants to go down. I actually don't have it at the moment, to be fair, but what I do have is the top of this range. And if that's a daily chart, I can slip down to the 4-hour chart. And once again, we find that monthly pivot, which has gone bang, 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 get out of here, acting as resistance as we speak. Now, whether that remains the case, and similar to your chart on the FTSE, mate, you're at a resistance level. So it's impossible really to trade it at all until we get a directional bias from candles. And the candles at the moment are, well, I'm waiting on the candles to tell me. First thing I need is a potential reversal. Well, we've got that in a double top, quadruple top, quintuplet, whatever you want to call it. There's all sorts of reasons here why the market can go down again. But conversely, and the populist theory, of course, that I heard many, many times when I was learning how to trade was the more a level is tested, the more likely it is to break. I think that's humbug, bullshit, baha, frankly. It's true that it can happen, but it's also true that the more times, in my opinion, a level is rejected, same will happen again. So I don't think that holds sway with me. And my due deference to anybody who trades breakouts on the third or fourth attempt, that's fine. If it works consistently, do it. But my way to deal with this is one of two ways, well, three really. Wait till it actually breaks the level and gives me a dominant close above that level, in which case I can then say, all right, we're now binary. This is either going to confirm the breakout, or if the breakout is wrong, then it's going to be wrong underneath the breakout bar. So we can deal with it that way. The other way to deal with it is to wait for a retest after the breakout. And if the retest doesn't come below the level that has been broken, then that's a strong indicator that price will continue to go in the direction it broke out. If, however, it does come underneath that level that we broke out from and retest that level from below, that too is a strong indicator that price will continue to fall and trade within that range. So that's exactly what I'll be waiting for here. My bias, if you like, based purely on a technical level and no other reason, is that we will find that this will be, if it breaks out, it'll be false. If it doesn't, then I'll still be looking for a lower high to trade within that range. So I'm only talking from a technical point of view. If I'm talking fundamentally, then I've got to say the US dollar is still strong and has no real reason right now to change that strength. So same applies. I don't care whether that's the case or it isn't, but when I see price at a level such as this, then I know that something will happen, and it's then that I need to pay attention. So if I get the signal that it's going long, then we can find a way into it. If I get the signal that it's going short, I can find the way into that as well. And that's easier for me than it is to go long, to be fair. But we'll see. So I'm really looking for either a false break of this level, so price up to here, find your way back in, retest the level, then go short. That is, I'm not going to call it a trade of the week, but if it does set up, it really is right now as we speak the only thing I'm interested in, and that's a fact. So Ash, tell me the fundamentals.
I think that's interesting, mate. I mean, it's just that the expansion that we've seen in the United States has probably been pretty unrivaled. The Swiss economy is just a little bit sluggish in comparison, and for that reason, I don't see the Swissy rallying quite the same as the dollar. And what I see there is a left shoulder and a big large head at the minute, which might well turn around. But I also see support on the weekly. I see support on the monthly for the dollar Swiss here.
It's weekly.
Yeah, that trend line. The trend line from below on that weekly would suggest to me that we are in a buy zone down here. Yeah, at all near it, near that buy zone down there. So I'd want to see the same as you. I want to see it break through that level, come back and hold it. Now, if it doesn't, then I wouldn't be interested. So I don't see the case for selling dollars. Except, and the only thing is that, the seasonal bias for the dollar is a tanking in around about the second half of December. So I wonder whether that is what transpires, because actually seasonally the other markets, the other currencies do very, very well in the second half of December, and that may still play out. But I don't think I'd want to bank my opinion purely on seasonals without other things being involved. COT data, again, very, very bearish the dollar. Which I don't like. It doesn't make me very comfortable because the fundamentals suggest upside dollar, but COT data and seasonal suggest downside dollar, and I'm not too comfortable. If that's the fundamentals switch, what's that, mate?
I said that's interesting.
Yeah, and it's not necessarily that the commercials are saying we should be short dollars. They're saying the risk is to the downside because it's the upside. Is the news that we've had so far is probably priced in, so we need something else to burst it through. So if the news comes out and it flips, particularly what we saw with the employment figures on Friday, if it flips and there's any element of potential doubt that we are going to do what the market is expecting we're going to do, which is raise interest rates probably 3 times next year, if there's any doubt that comes into play, the dollar's probably coming down. It's probably coming down hard. So that's where the risk is. So I'm not comfortable saying let's go long dollar, but I don't really see how the dollar at this stage is going to weaken because the expansion is in America is pretty outpaced in comparison to the likes of the Swiss.
Yes, I agree with you. From a fundamental aspect, it's really difficult to call this short.
Yeah,
but that doesn't really sway me so much.
No.
And that COT data and the seasonals that tweaks my ear. So if I see a signal that this can go short, I think I'll go with it.
Yeah, me too. We have been joined by George.
Well, we should have been joined, but I'll get that out. Joined by gorgeous George. Hello, gorgeous George. How you doing, bud?
I'm doing very well. How are you guys doing?
Yeah, we're doing good, mate.
Excellent.
No cause for complaint, mate.
Brilliant.
No.
Brilliant.
We're hearing that the Omicron news and data is a little bit more favourable at the minute. Is that right over there, George?
Well, that's a very good thing to ask me at this present moment because last Thursday, my wife woke up, we just moved house to a new location close to school. So she woke up saying, listen, I'm just not feeling well. My head is just feeling not right. Now, she suffers from migraines. We've tried everything with neurologists and nothing could be done. So she can bear a migraine like not. So when she says she's not well with her head, you got to jump around. It turns out all 3 of us went to be tested. She was positive for COVID.
Oh, wow.
And my daughter and I were fine, but we got all the symptoms.
Right.
So we're all on medication. So this is day 5 of the 7-day recovery. So she's kind of through the danger period.
Right.
But what's happening is that the number of cases that we are hearing is just skyrocketing.
Right.
Literally skyrocketing in terms of the spread of it, highly contagious, etc., etc. So I'm not sure what good news there is. Maybe the scientists are seeing something different, but there's quite a huge surge in
right.
spread.
Well, do you know? I think. Sorry, I was just going to say. I think from what I'm gathering is that, and it's all kind of economy kind of led. What I'm gathering is that they are suggesting that it's not something that will shut down the economies in the same way that it did last time. So When I say it's maybe that, the initial news has been tempered somewhat. I guess I'm saying certainly the government over here is quite happy just to let things be and let it spread, because it's not as the reaction from people isn't quite as extreme, even though very contagious.
So the good news, if you've been vaccinated, we were vaccinated, is that the impact is much less on you, on the physical body. Chances of recovery to recover much faster exist if you've been vaccinated, and you shouldn't end up in hospital. So we were vaccinated. Our daughter hadn't been vaccinated, because they didn't open up the age. She's only 10, but she's fine. So that's the good news. But for guys who have not been vaccinated, we're actually hearing some pretty sad cases. It's quite rampant. There's not as many deaths as there were, but it's quite vicious in its impact. So I think, because they kind of look, and now I'm just guessing, I haven't read. I think they look at what do they call it here? Herd immunity. What percentage has been vaccinated, et cetera, et cetera. So I think if you take that into account, they probably won't hard lock us down as they did with the very first one.
Right.
Yeah. Well, mate, massive hugs and big well wishes to your princess and to your family, of course. I hope that is the end of it rather than the start of it. And if there's any further infestation, I'll put it that, or infection, then I hope it's as mild as it can possibly be.
Yeah, superb. So it's fascinating to hear you guys talking. I'm always excited to hear about the fundamentals, because I would fail any exam on fundamentals.
Well, mate, I might not get an F, but I might get a D minus. So I'm the same. I open my ears when Ash talks, because he's all over it.
So
what are you looking at, mate?
So, at the present moment, I'm hoping something sets up for the week. Right now, I'll just flip through all the 7 markets. It's trading range, price action, and that also is not absolutely clear, because if it's clear trading range, we still trade, right? Off the resistance back into the trading range, or off the support back into the trading range. So I always, as I said, start with just looking at the daily. And if you look at it, where would I jump in to say, let me go down to the 5-minute? Definitely not today. That dodgy candle from yesterday, the bulls controlled it. If that had closed on its low as a bear candle, we'll definitely be looking for shorts very quickly. So what I'm interested in, if today ends up as an inside candle with a bear body, that's breakout mode for me, then I'd look into to trade and see if we can get anywhere into this low. So that's what I'm kind of looking at. If it ends up as a bull candle, I'm doing nothing, because we get into the top of the kind of trading range, 20 moving average, etc. So waiting, gold, same kind of thing as well, because the question you got to ask yourself, if the bears were strong to give us that candle, why were they not so strong enough to break beneath this rising channel line here? Because then if they were, we would have been looking to sell, down to these lows. So that didn't happen, but still, we're close to the bottom of a channel, which, what's a channel? As far as I'm concerned, it's just a trading range, but it's sloping upwards, right? Or it could have been sloping downwards. In fact, sorry, let me not say what is a channel. What is a broad channel? Because if it's a tight channel, then it's some form of a breakout mode. So in terms of this broad channel, this would be ideal to look for ways to go long, because you're at the bottom of a trading range. But you need to see it set up. It would need to get to the top of this trading range here, come back, give me a setup, because that's a double bottom, high low double. So there's a double bottom there, high low double bottom. So fantastic setup. But what I want to see is market come back and give me an entry here, high low, or same level. Then I can look to go long, but I'm trading a trading range, which would mean I always reduce my initial risk. I go in like at 0.5% when I'm trading ranges, and then try and take profit somewhere in the middle. If you get acceleration, hold until you get to the top, then you've got to find ways to sell. So now we're just trading a broad trading range. So I'm waiting for the setup there. Don't have to happen this week. Oil, again, I mean, look at that. I can't justify
What a mess.
going. Yeah, I can't justify jump going in. Now, what I always, I mean, at the 5-minute time frame, there's always opportunities to trade, guys. So if you really wanted to trade, when you see this, you just know, okay, I'm going to go and trade a trading range, expect reversals. But the point then is, why work hard when you can wait and make good money without working too hard on it? So a little bit of waiting there. And Hang Seng 50 is interesting. Now, I'm kind of thinking short at the moment, but why would I not be in the market today? Because that entry bar is not good for the bears, okay? Because they're getting in beneath an inside candle, a bull candle, which doesn't show much strength having been built up by the bears, if I can put it that way. However, if today ends up as a candle, as a bear candle closing near its low, that becomes a signal candle for me to go and look for shorts, hoping that the bears are strong enough to try and give us a new low of the year. So again, waiting. Now, S&P 500, isn't that interesting? We spoke about this correction for a long time, a few weeks ago. When you look at it, when we were down here and talking about it, it didn't look like it would be possible, but here we are. Great possibilities. Inside candle, outside candle, all breakout mode. But if you get a small inside candle here, there's nothing to trade until we see a breakout of that and see if you get a double bottom here. If you get a double top here, there's nothing to do. Just wait. So as far as this is concerned, I'd love to see a proper double bottom being set up by the bulls, and then hopefully an attempt to go and do a break. Will it happen this year? It might. But this is breakout mode, inside, outside, inside. The market will break out. Question just depends which way it's going to break out, and then which way we're going to look for our opportunities. Before Ash corrected me, I used to tell everyone this is a FTSE 100. Now I say it's a derivative of the FTSE 100. How is that? That sounds clever. It's a symmetrical derivative of the FTSE 100. I think that's even better.
Yeah.
But again, trading range price action. How are you going to trade this? Again, your mind's going to be thinking, because of what you've seen here is trading range coming off the 20 EMA. If we get an attempt to break above that today and a reversal back, giving us a nice signal bear candle, then we can look for shorts in the day, but just to get down here. If we get it closing above here, bull close, nothing to do, because most breakouts above trading ranges fail. We need to see follow through and then pull back and then trade. So decent to wait. Why would I be thinking bearish? Well, because of this little inside candle, bear candle, that gives me enough information that the bulls failed to close above that 10 EMA, so they didn't have the strength. Bears at least created a small body, the minimum they could do. If the bears are strong enough, they can even allow a breakout today and they pull back, but give us any low closing beneath the open of today, bear candle, then let's go look for shorts, but only as far as that is concerned.
I tell you what, with the FTSE, George, you see that gap up there? You see that that little spinning top before that big bet? Yeah, that gap up there. I think for the bears to really get control of this market, that gap's got to be closed, or the top, the bottom of the gap has got to be tested. So the gap acts as resistance to me. It's either the gap, the actual gap acts as resistance, or the gap gets closed. But the trend line from the high on the around about the 12th of November are kind of coming. Yeah, that kind of coming down there. That area, if that runs into that gap, which I think it does, that to me would be a really good point to try the short. I think this is no man's land. I just don't, for me that's going higher. I see that the market trying to get up and see, test what's going to happen around that gap. and then I'll be looking for reversals. And the only reason I'm commenting on this one specifically is that I do a bit more work on the FTSE than the others. Even though I agree with your analysis of where we are, that gap is just too evident.
I mean, you're right. And that's a good rule. It's like saying most breakouts fail, right? So we've got to wait to see the retest and trade. Most gaps will close at some point.
Or it will use it as a point of resistance, which when you look at that trend line, that's what it looks like to me. It looks like it's going to get to the bottom of the gap and not be able to close it, and it's just going to shove down from there. So I'm interested in the FTSE short at that point.
Fantastic. Because you trading, what are you trading on? 15 minutes? Is it?
I mean, whatever, really. I mean, it's, I'll take a trigger off the 5, but I'm trading, the thing is that and I always sort of say this to when people ask me about timeframes, I don't think you're ever really trading the time frame that you take the trigger from. I think you're trading the way up. And I remember the guy that taught me to trade, when I said to him, he was looking at all these timeframes, and I said, which is the most important? And he said to me, all of it. It's all important. You got to know the monthly, the weekly, the daily, even if you're trading on the 15. So I'm looking at the daily very, very closely. But I'll probably take a trigger off the 5 or 15, depending on how the market looks. But it will depend. If I'm unsure, I'll go up a time frame to the hourly. If I'm unsure on the hourly, I'll go up another time frame to the 4 hourly. So it's more an overall set, and this is what the fundamental kind of aspect makes me. That's the way it makes me think. It makes me think, what's the big picture, and then can I get the signal? And it doesn't matter what time frame I get the signal from, but it's got to be clear. Okay,
that's quite interesting. So I'm using, I start off, of course, just to get a sense of the month, weekly. I mean, these dotted lines are the high low of last week.
Yeah.
And then the daily for me becomes quite key. So if so I'm thinking short, but what I want to see is what happens with this candle. If it breaks up that and pulls back and closes below, good, I'm gonna look for shorts, even if it doesn't break above last week's high or the 20. But if it reverses today and gives me an inside candle that is closing on near its low, I'll be comfortable to go and look for shorts on the 5 minutes and just manage it during the day. It may still come back and so there, fantastic. Gives me a decent 2-bar reversal off here. Gives me something like this. I'm going to look for shorts as well. So what I now see on the daily becomes the kind of like execution trigger actually.
Yeah, gotcha, mate. Gotcha. Brilliant.
Excellent. So that's kind of what I'm looking at. So a bit of waiting, but that's fine. When they come, they do come. But rather wait than work hard trying to manage difficult things.
Oh, do you know, mate? I think your analysis is fascinating. It really is. I mean, I think but both you and Jeff, the way that you look at charts technically, I just think it's so absorbing. And the interesting thing is, you, myself, and Jeff have said the same thing, that we just don't have a clear enough picture to trade today. And we're preparing to trade, and the work is being done right now. But to be kind of professional, and as you say, to make life easier, we need to see something specific. And unless the market plays out the way that we envision, we're just going to ignore it. I think that's quite poignant that you said the same as Jeff and I about today.
Yeah, excellent. And I think that's it. We will get very busy when it sets up. And that's fine. Then we just work through our risk, reward, and probabilities, and make the returns. Until then, the hard work is in the analysis, right, and the waiting.
Yes. Well, yeah, and I think the hard work is twofold, isn't it? It's the analysis and also seeing a market moving and not jumping in. Because we all get that kind of that desire. No matter how long you've been trading, you still get that desire. But I suppose the experience tells you, park it, put it in your back pocket, and let the market play out the way you need it to play out to make life easier. I really like the way you put that, to make trading a lot easier.
Yeah.
The word temporary comes to mind when you're talking about those moves that you think, should be in that, should be. I didn't have a reason, but I should be in that. But that move is is temporary because
Yes.
it's going to pull back. It's
Yeah.
going to give you an opportunity at some stage, or it's going to be wrong, one or the other.
Oh, mate, I
So-
like that too. I like that too.
Yeah.
I'm gonna have to write this down. Come on, there's
Did
some,
you
there's some
record
good insight. Right. Sorry, guys. I've got to go. I've got a meeting with
Right.
Paul, and he's he's
Okay.
after me.
Yeah,
Thanks,
time
guys.
to wrap it up. Tell him to
Yeah.
wait. He needs to be patient.
Okay. Thank you so
Thank
much,
you, George, mate. And
Thanks, guys.
Brilliant.
mate,
Yes.
all the best over there. I hope everything works out grand
All
for
right.
you.
Take care, guys. Cheers.
See you next
Appreciate
week.
Okay,
Last Monday
Happy
next
days.
week, George.
Righto, guys. I'll wrap it up. You two guys can bail. I'll just wrap it up here by saying that I think we've come to a conclusion that there's not a lot going on here from a trading perspective.
I'll bid you adieu, mate, and let you do that. Thanks so much,
Right.
Jeff.
Cheers, mate. Adieu to you, and have a good week. Catch you Thursday.
Thank you too. See you Thursday, guys.
Okay, so yeah, not much to add, frankly. I think we've given you a fair indication that there's not a lot happening for us at the moment. I'm watching dollar Swissy very, very closely because I think there will be an opportunity here. That candle there's starting to look very interesting. As I said before, if this does close on 4-hour chart I'm on at the moment, on or near its high, it then gives you the indication that it's serious breakout. And for that reason, if it is, it should continue to go in that direction. However, if it's not, then the buyers are going to have trouble here underneath that bar. And that's where I start to get interested. Not with a candle that looks like that, not with a candle that looks like that, but with the candle that looks like that closes on its high. So if that closes on its high as this breakout, then I get the strong indicator that it should go long. And if it doesn't, then guess what? These guys are in trouble, and they're going to be in trouble here. Weekly pivot might be an issue. It might be an issue. We'll see. Anyway, that's kind of the theme that I'm taking into the week. I'd much rather trade break-ins than breakouts. So I'm looking for burglar trades as they come back inside the range and trade them down to the bottom, or conversely, if they're going through the bottom, trade them back up to the top. Thank you so much, trading buddies, for being with us. We hope you've got something out of the show. Obviously, no trades, but you might have got some idea as to what may happen. And if it does happen, then that's when we'll be jumping into the market, but not as yet. Oh, one thing, those of you who are following the CAD Swissy trade that I'm in and am still in, I have moved my stop loss. I've tightened it up again. May well get taken out today, and that's fine. I haven't got an issue with that. It is now at, can't remember the level, 72.20. Oh, look at it. I think that was the level I put at 72.20. That's where I'll trail my stops to. We got in up here, don't forget. So this is a good trade no matter what happens. Obviously, if it continues to go short, then we'll capitalize on that as well. And I may move my stops tomorrow. We shall see. If we're still in, if we're not, then we'll find something else. All good. Have a great week ahead, folks, and choose wisely with your trades. We look forward to catching up with you on Thursday. I'll be updating any trades that I do look to get into in the Telegram group. If you're not in the Telegram group, I think, I'm not sure you can get in it below us, but maybe, Angel, if I can press you just for one more second, if you could put that link into the chat box, then you can join the Telegram group there. There it is. Happy days. I think there's a month for free on that. And what that gets you is updates on the trades that we take in this show, outside this show. A lot of you don't get to see the trades that we take, of course, and they will be in that Telegram group. I do a daily analysis, which is also in that Telegram group. And if you aren't in that, then check it out. It may do you some good. We'll see. Have a great week ahead. Thanks, Angel. Bye-bye.